I understand you've hired somebody very experienced and pretty well known in the trade. Who is this person?
Yes, this is Lau Hock Lee. And Hock Lee has worked for British Petroleum for 22 years. He, in his last 8 years, was managing BP's bitumen trading group for the Eastern Hemisphere. So he's intimately aware and connected within the Asian market. And Hock Lee, with his previous trading understanding, brings a different dimension that we didn't even consider when we started this. And that is having an understanding of the trading aspects, the ownership of the product aspect. And that really leads to how you integrate your logistics assets. It's we looked at it as taking assets and overlaying them on a trading platform, and now we're considering how the trading platform overlays on the logistics assets. So it's a different sort of mindset and model, but he brings many new ideas, and we're trying to run fast at the moment. He's only been with us since April 15th, so less than a month, and it's remarkable how he's come forward with new concepts, which I think will propel us from just being a company that has purchased into the market to an active player within the market.
Great. When are you, or have you already started to undertake some of this work on behalf of the big players?
No, we haven't, but it will take time.
Yep.
When I said that it's a very integrated supply chain, it is. And people don't give up what they believe, and rightly so. They have been managing these supply chains for many years out of necessity. And nobody gives up that willingly or easily.
And of course they need to find a trustworthy player.
They do. And right now, we're so new into this business that it's hard to gain the kind of credibility, even though we have the reputation for the chemical fleet. This is a different product, and it has different complexities to it. I think Hock Lee will give us some credibility in that, and I think we have to sort of start with the smaller side of it by showing our commitment, both from a capital point of view as well as doing a few deals to establish ourselves. But we have a long-term horizon on this. We don't need to overnight try to come in and tell people how things should operate. There's a learning curve that we're going under at the moment, and in the next few years, I think we'll start to see our model come to fruition.
Right. Okay. My last question in this interview pertains to high oil price. As we speak, oil is just a little under $125 a barrel. That's more than double what it was a year ago. How is this affecting the storage logistics business overall, and in particular your company? And secondly, you're just starting this bitumen trade, this role in the bitumen trade. There's a lot of forecasts that with high oil price, people are going to drive less. There's going to be less demand for private transportation, cars and so on. So how do you think this will impact your business on the overall chemical side and in particular on the bitumen side? Oil price is clearly at historical highs now. My belief is that we haven't seen the end of that. It's going to continue to go up. Impact on our company and on trade, several-fold. Clearly the cost aspect, the operating costs, is significant on our company and on all shipping companies. There are hedging mechanisms and there are ways to offset some of that and pass that through to the customer, and that we are doing. We will continue to do, but it has an impact. Our margins are getting squeezed as a result of that. You could argue that trade has actually increased as a result of high oil prices.
if people speculate that oil price will continue to go up, they will move and ship more products now at a lower cost than they will otherwise in the future. So trade has a gain, has a net gain in the short term, as we see it. That's both chemicals and all other products that are being shipped today. The greater influence of what happens, as the economy begins to suffer under the weight of this added cost, is very hard to predict. I think the relevance of the price of oil is less than the relevance maybe of the currency issues today, with the weakening of the U.S. dollar against almost all major currencies. And that has an impact which is not recoverable. So for a services-based company like ourselves that is generating income in U.S. dollars and has much of its costs going out in other currencies, that is something that's not recoverable, and that will potentially cause for more of an economic problem than the price of oil, which has a pass-through effect and a net gain effect. Will people stop driving cars and companies stop paving roads and the bitumen industry dry up? No, clearly not. It may slow down some of the growth in the emerging markets. Probably will. But no, I don't think that this is going to be the end of what we know today as the growth of so-called civilization. The price of oil, now everybody's an expert, and they're saying that it's 200 before it's 50. To a certain extent, I agree with that, and I think it's clear that the main oil producers in the Middle East don't have the incentive at the moment to extract more oil today than they already are. It puts further pressure on price rise, which they gain. If they do take it out of the ground, they have to sell it in U.S. dollars, which are depreciating, and then they have to use those U.S. dollars for investments, which in an uncertain economy doesn't make a lot of sense. So keep the oil in the ground is a pretty good strategy for the big oil-producing nations. That's their vault, that's their bank, and I think somebody once said that there's not a lack of oil, it's the hole in the ground that's too small, and that analogy is very fitting to what's happening today.
On that note, Andrew, thank you for this interview.
My pleasure. Thank you, Wang.
Thank you.